Welcome to Invest Education Hub, where we turn smart investing into simple decisions. You know, everyone wants to get rich investing, but in 2025, most people are doing the exact things that quietly, and I mean quietly, destroy their wealth. It's not because they don't try hard enough, but because they don't even know what's actually holding them back. In a year that's just brimming with opportunity, a few simple mistakes can cost you the very future you're trying so hard to build. So stay with us until the end, I promise. This might be the most important financial reality check you'll get all year.
Okay, let's just dive right into this. This statement right here, this is the entire heart of what we're talking about today. It's telling us that the biggest thing standing between you and real wealth isn't some complicated market secret or a hot stock tip. It's not the economy, it's not some headline, it's us. It's our own behavior. The decisions we make, usually with the best intentions, can become the biggest roadblocks on our path to financial freedom.
So, to really get to the bottom of this, we've broken this down into 5 key parts. First, we're going to pinpoint that single biggest wealth-destroying mistake. Then, we'll uncover the incredible secret of compounding, lay out a super practical million-dollar blueprint you can actually use, explore the mindset, the patient investor's edge, and finally, we'll show you the very real, very high cost of waiting.
Let's start with the big one, the core problem, the wealth-destroying mistake. You know, there's this fascinating and honestly kind of frustrating gap between how well the stock market does and how well the average person investing in it actually does. And this isn't just a theory, it's a fact, documented year after year. Let's actually look at the numbers.
Now, what's really wild about this slide is the story it tells. Over the last 20 years or so, the S&P 500, the big benchmark for the US stock market, has returned about 9.5% a year. Pretty good. But the average investor, they only saw a return of 5.8%. That is a massive difference. We're talking about a gap of almost 4% every single year. Just to put that in perspective, on a $10,000 investment, that's the difference between it growing to 60 grand or just 31. And this isn't because the market's rigged, it's because of something called the behavior gap. So here's the crucial part. This gap is totally self-inflicted. It's driven by 2 of the most powerful human emotions out there, fear and greed, right? When the market is soaring, we all get that FOMO, that fear of missing out. We see everyone else making money, the headlines are screaming, and we jump in and buy, often right near the top. Then what happens? The market tumbles, the news is all doom and gloom, and that fear of losing even more money just becomes overwhelming. So we sell to stop the pain, usually right at the bottom. This cycle of buying high and selling low is, without a doubt, the single most destructive thing you can do in investing. Okay, so now that we've met the villain of our story, our own emotional brain, let's meet the hero, compounding. Seriously, this is the superpower that can completely defeat that destructive cycle. It's a force that works quietly, almost invisibly, in the background. But the results over time, well, they are absolutely explosive. This right here is the fundamental mindset shift you need to make. Just forget about trying to predict what the market's going to do next. Honestly, that's a gambler's game, and the odds are terrible. The real path to wealth is to stop thinking like a gambler and start thinking like an owner. When you buy a broad market index fund, you're buying a tiny piece of the greatest companies in the world. Your job isn't to trade in and out, it's just to be an owner and hold on, letting all that innovation and profit work for you.
And this shows you just how powerful that is. Just look at how the growth starts to accelerate. It's like a snowball rolling downhill. In the first 10 years, your $100 a month grows to about $19,000. I mean, that's nice, but it's not going to change your life. But now watch what happens. That last decade, from year 30 to year 40, your investment doesn't just grow, it absolutely explodes, jumping from about 228 grand to over $1 million. That's a gain of over $800,000 in just 10 years. How? Because at that point, it's not just your money making money, it's your accumulated earnings that are now generating even more earnings. That, my friends, is the magic of compounding.
Let's just let that number sink in for a minute. Over $1 million. And it all came from an investment that costs less than a fancy coffee every day. This isn't some fantasy, it's not a lottery ticket. It is the mathematical certainty that comes from being consistent over time. And this number, it represents so much more than just money. It represents freedom, options, security, the ability to live life on your own terms. The only catch? You have to give it time to do its thing.
Okay, so we get the principle, right? Now, how do we actually put this thing into practice? Let's break it all down into a super practical, actionable, million-dollar blueprint that you can start using right now in 2025. This isn't about hot tips or trying to outsmart the market. This is about building a system that replaces your emotions with a winning strategy.
These 5 steps, they work together like a well-oiled machine. You automate your contributions, that takes willpower and emotion right out of the equation. It just happens. You choose the right vehicle to make sure you're diversified. You reinvest all your dividends. That's like putting your money's children to work for you. You increase your contributions, even just a tiny bit each year, that dramatically boosts your final result. And finally, the golden rule. You stay invested, especially through the storms.
Let's zoom in on step 2 for a sec, because this is where a lot of people get tripped up. The goal here is just simplicity and diversification. You do not need to be a stock-picking genius. Low-cost index funds like VOO that tracks the S&P 500 or a total market ETF like VTI let you own a small piece of hundreds, even thousands of companies all at once. The key phrase here is low cost. Every single dollar you pay in fees is a dollar that isn't compounding for you. So by keeping costs low and spreading your money out, you capture the growth of the entire market, not just some hot pick that could fizzle out tomorrow.
Now, for step 5, this one is probably the hardest, but it is the most critical. This quote right here. This is your anchor when things get choppy. History is so unbelievably clear on this. Markets recover. The people who panic and sell during a crash are the ones who turn a temporary paper loss into a permanent, real-world loss. But the investors who just hold on, or even better, keep their automated contributions going and buy more shares on sale, they are the ones who ride that inevitable wave of recovery to new all-time highs.
And that brings us to the patient investor's edge. Because look, having the right strategy, that 5-step blueprint, that's only half the battle. The other half is having the right mindset to actually stick with that strategy when things get tough. It's not about being smarter than everyone else, it's about being more disciplined and more patient.
This slide just perfectly illustrates the 2 paths you can take. The trader is on this emotional roller coaster, right? They're glued to the news, they're chasing the thrill of a quick win, and ultimately they fall right into that buy high, sell low trap we talked about. But the long-term investor, they're calm. They're not looking for excitement, they're looking for results. They follow their system and they see market dips not as a crisis, but as what they are, an opportunity. It's a sale on high-quality assets. They don't just buy more on dips, it's a systematic part of their plan.
And this right here, this is why that patience pays off so handsomely. Time is the ultimate risk reducer in investing. All the daily, weekly, even yearly ups and downs of the market, that's just noise. But over decades, that noise smooths out into a clear, upward trend that reflects the fundamental growth of our economy. Time literally transforms volatility from your enemy into your greatest ally.
And finally, let's talk about the real cost of waiting. Because the single most valuable asset you have in this whole equation, it isn't your income and it isn't your IQ, it's time. And time is a non-renewable resource. Every single day you wait to put that resource to work for you costs you more than you can possibly imagine.
So let's actually run the numbers on this. Let's say your goal is to hit that $1 million mark by the time you're 65. We saw that if you start at 25, it takes about $100 a month. But what if life gets in the way? You think, I'll wait till I'm 35 when I'm more settled. Just a 10-year delay. What's the real damage?
Yeah, that's the staggering, absolutely brutal cost of procrastination. To hit that same $1 million target, you would need to invest not $100, but closer to $270 every single month. You have to work almost 3 times as hard just because you missed out on the single most powerful decade of compounding, that early runway where your money builds the foundation for all that future explosive growth. Time isn't just money, it's the leverage that multiplies your money.
So this is it. This is the ultimate formula to take away from our time together today. It's not complicated. It doesn't require a finance degree. It just requires time, which you have starting this very moment. It requires consistency, which you can achieve with that automated blueprint. And when you combine those two, you unleash the unstoppable power of compounding. And together, those 3 elements create true financial freedom, a life where your money works for you and not the other way around. Look, building wealth isn't about being perfect. It's about avoiding the traps that keep most investors stuck. If you can eliminate these 5 mistakes, I promise you, you're already ahead of 90% of people trying to grow their money in 2025. Start consistent, stay disciplined, and just let time and diversification work their magic for you. If this explainer helped you see your financial habits in a new light, do us a favor. Like it, subscribe, and share it with someone who really needs to hear this message. Here at Invest Education Hub, we turn financial complexity into clarity, one smart decision at a time.